Get Chantal Marx from FNB Wealth and Investments to tell us more. Chantal, thanks very much indeed for talking to us. So, as I said, in the midst of the turmoil, our local market really had a good day. Just looking at the rand a few moments ago, close to 20 cents higher than it was yesterday against the dollar. Why are we seeing such a positive picture in the midst of all of this?
So from a JSE perspective, we are following global markets in terms of dip buying. And what we mean by dip buying is everything that was down over the last week or two is basically up. Investors are thinking that some of these companies offer value now, perhaps significant value in some cases. And I'm just going to give you a few examples. Naspers down substantially since the start of this process. Richemont, all of these stocks were up today quite strongly, and they're an important part of the index. When it comes to the rand, it's partly because we are seeing foreign investors very interested in the South African market, both on the JSE as well as government bonds. They just look more attractive relative to the rest of the world and safer within an emerging markets context. And then also supporting the rand is very strong commodity prices. Only oil really is a detractor for South Africa at this moment because we don't produce it here.
And I know overall the oil price is increasing, but it was interesting to see yesterday we were heading towards $140 a barrel. Took a look at the numbers just before I got on here, and we're down to 120 today. Is that significant or not, or is it still a bumpy ride ahead?
So I think we're still going to have a pretty bumpy ride ahead. But what this does tell us is that when we are seeing hard news coming through, there's almost a relief in the oil market. So the market speculates, it pushes up the oil price. In this case, the speculation was that the US and the UK, and perhaps even some European countries, were going to ban Russian imports. And then when the news actually broke that the US was going to do that, it was almost like there was a sigh of relief, and that it's now happened and they can stop speculating, and the oil price pulled back to, let's call it reasonable, but not so reasonable levels.
Before I let you go, a couple of results out today. I've just got time for one. Nedbank showing us some good numbers today, and I think interestingly enough, when we have good bank results, it tells us something about the consumer, doesn't it? I mean, in the case of Nedbank, it looks like people are not doing too bad on their debt repayments.
Yes, absolutely. And this is something that we've seen among the banks generally. So when COVID-19 hit, the expectation was that a lot of people and a lot of businesses were going to struggle to meet their loan obligations, to make their interest payments. And banks were very cautious. So they actually built in a buffer in their financials to counter that and to allow for that. And it seems as if consumers and businesses alike have performed a lot better than what the banks were expecting. And as a result, you're seeing a really nice uplift in profitability. What's also helping them is transaction volumes are increasing. And of course, unfortunately, banks are one of those industries that actually benefits from higher interest rates. So also being helped along by that.
Chantal Marx from FNB, thanks very much indeed for your time. All right.